Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. On Monday, we took a total of 3 trades, 2 winners, 1 loser, for a total absolute return of $5,023 or 2.62% in our 1% risk model portfolio, where we are risking no more than 1% per trade. SPX chopped, drifted higher, so there were plenty of opportunities for singles, but you had to be tactical. I played long puts a couple times here, but the big winner, long butterfly 74.40 strike for a 221% return. This was put on in the last 40 minutes of the session, and we pinned with the SPX closing at 74.37. On the session, SPX opened with a gap to the upside above the 7,500 handle, a break and holds. We moved higher into the 20-25 zone, broke out, and moved into the next zone of 75.40. That was the previous high, with the big SPX call wall overhead, 75.50, which was also the max call. Volatility contracted, VIX breaking the 16 handle, so no response there. That vol contraction supported upside. Additionally, growth sectors outperforming, bouncing back from weakness on Thursday. We had tech close up 1.65%, semis 2%, and mags 1.8%. 0DTE options positioning gave some indication that we could test 75.50. If we look at the volume profile here, 75.40 was the max call for most of the session, but this is a dynamic level and it shifted higher in the late afternoon to 45 to 50. But 50 was significant here in regards to this profile, as it was the volume drop. So you can see a huge drop in call volume above 75.50. Plus, it's the call wall, so very strong confluence zone, call wall, max put, volume drop. So very good counter trend setup, selling credit spreads. That would be a call credit spread at or above, or a butterfly, which is what was my preferred strategy. Looking for that reversion back down to the 40 previous high and the 35 implied high. Playing not only the volume drop here, but playing the call wall statistics. Now, we did technically breach the call wall. The call wall was 75.50. We traded a few points above it. And when the call wall was breached, how often did it close above the call wall? 21%. So it was a very high probability bet. Additionally, very easy to hedge out the risk if you were concerned about the MOC. So MOC is in the last 10 minutes. We usually get a big directional move due to the buy or sell side imbalance. Now, it worked in our favor yesterday, 7.1 billion to the sell side. We had that quick flush down. But of course, it could have been up. But if you were concerned about that, you could have easily hedged out that butterfly, buying just a single option, a single call prior to that MOC. 75.50 was trading for like $1.30. You could have bought 75.55 calls for like $50. Point is here, very high probability trade, very easy to manage and hedge out that risk. Didn't need to do that, and we pinned for a nice winner. For today in the pre-market, the S&P 500 is seeing modest weakness, down 0.2%. NASDAQ down 1.1%. IWM Dow seeing modest gains, so a bit of a rotation going on here in the pre-market. And rotation has been the primary theme for over a month. Hence this sideways-like action as the semiconductor trade has started to break down. However, if we see that rotation into the Mag 7s, that is going to be a positive. So look, when you have rotation, you get a lot of varying conditions, day over day, week over week. Can be quite hard to trade. So very important to keep a close eye on sector performance, both absolute and relative. Most importantly here, technology, which is about 34% weighting in the S&P 500, and the Mag 7 names, which is collectively about 55% weighting. So if we're seeing rotation into the growth names, that's going to support upside. If we're seeing rotation out, it's going to pressure downside. So we always want to keep a close eye on those, growth, XLK, megs for directional skew amid rotation. In terms of levels, On the downside, we have 75.25. This was resistance turned support in yesterday's session. This is also the SPY flip level today, so a break potential to spark volatility. Keep a close eye on the VIX as we're back to that 16 handle. Below that, 7,500, previous session's low, also 7,500. SPX flip level, 74.95. Gap zone below. Entry 7,500, fill 74.83, followed by 74.75, and then 74.55. On the upside, call wall unchanged 75.50. SPY call wall shift lower, SPX equivalent 75.55. Previous high 51. So this is the first major resistance zone for the bulls. A break implies continuation, with the next resistance zone at 75.70, 75.75. There is also a gap zone just above that, so let's take note. Scroll back here. Gap entry would be 74.78, gap fill 74.84. In terms of the implied move today, 0.7%. That is an implied high of 75.90 and an implied low of 74.84. Transitioning over to our dashboard, total gamma exposure for the SPX remains positive, 780 million notional, trading above our transitional level of 74.95. Above, all strikes are positive, that is supportive for the market price. Below, all strikes are negative, that is destabilizing for the market price. 75.25 to 7,500, kind of a flat profile here, a bit of a mixed zone, some strikes positive, some strikes negative. So we could see kind of higher volatility chop within that zone, very similar to that 50-point zone last week between 7,500 and 74.50. That's obviously not the case here today. Above 75.25, we have call wall 75.50. This did not shift higher, although we do have some call wall candidates emerging. That includes 7,600 and 75.75.